Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is Keith Weiner, founder and CEO of Monetary Metals. Keith, thank you so much for coming back to Wall Street Silver.
Thanks for having me on, Ivan.
Yeah, it's a huge pleasure. I wanted to get you on to talk about all the craziness that's happening in the precious metals market, the whole economy. First, let's start off, I guess, with what's concerning you right now in the markets, Keith?
You know, what's not concerning me? People talk about modern monetary theory as policy of the left, and of course, all the academics that fringe academics, I should add, that promote it are on the hard left. But it's not really all that different from Trump's, policies, which is slam interest rates to zero and spend more. And now he wants more efficiency. We'll see what that means. I'm reminded of a Warren Buffett quote when he said, if you have a management team with a reputation for excellence, come into a company in an industry with a reputation for bad margins, it'll be the reputation of the industry that survives intact.
Oh, that's not good.
Um,
Well, that's not good for Trump.
so if you have a team that intends to cut government waste in a government with a long-standing reputation for being wasteful, I think it's going to be the reputation of the government that because it's so institutional. You get the perverse incentives. I remember one story of some guy having some agency, and so one of the things that they do is they get a budget for the year, and if they don't spend that budget, then budget for next year is automatically cut back by that amount.
Right.
So this guy had a reputation for at the end of the year, and I mean, they all try to do this. At the end of the year, if they didn't spend the money in their budget, they have to find something they can do quick to spend it. And what he did was he would add another layer of pavement to his parking lot. And he infamously, the parking lot was like a meter thick of asphalt because every year they would add another layer.
That's crazy.
Just total. It's like, how do you get rid of that? Well, you change the rules of budgeting, which
Right.
gets deep into, the rules of governance, and um, it's way beyond what, a quick fix. But anyways, um, I see more debt, more deficit spending. I see lower interest rates, which on the one hand will provide a certain degree of relief for borrowers that found themselves, with cost of capital, which is the interest rate, is above their return on capital.
Right.
Imagine you have a business generating 3% return on capital and you're paying 8%. I mean,
Yeah.
you're dead.
Yeah.
Now, if you can get the interest rate lowered to 2%, you maybe survive again. But, a zero and falling interest rate causes enormous amounts of harms in so many ways. Um, so you got that, all that going on. You've got a rising degree of nationalism, protectionism, mercantilism, trade
Yeah.
war, tariffs. There's an old saying that there's three things that normally cross borders, which is people, goods, and money.
Yeah.
And if governments stop those three things from crossing borders, then a fourth thing will cross the border, which is armies.
There's about $15 trillion worth of physical gold in the world sitting there costing money rather than being used. It's just absolutely insane. Monetary Metals is bringing gold back into the financial world, putting gold to productive use right now. The problem with gold, of course, in physical form is that it's heavy, it's cumbersome, it's not particularly easy to ship, and it costs money to store in a protected manner. This platform Monetary Metals created is a proven concept and allows gold to be put to productive use. So instead of sitting there costing you money, it's actually in use earning you money.
Learn how you can earn 2 to 5% in our leasing program and how accredited investors can earn up to 12% on silver paid in silver. This advertisement is not investment or financial advice. Minimum investment applies.
Wow.
And, I have some concerns we're heading to a dark place. The world last saw it in the 1930s. We'll
Yeah,
see.
because if you have
I hope
trade
they're
wars,
wrong.
because if you have trade wars and you're having all this craziness in the markets, there's going to be more instability. How do you think it's going to leak into the precious metal space over the next 4 years while Trump's presidency? Obviously, Trump doesn't control the set like control. He doesn't print money. He doesn't own the central banks, so there's still going to be more debt spending, more printing of money. The fundamentals for gold and silver are still there. So, what are you seeing for the precious metal sides, Keith?
I see we're in a bull market. I've been saying that now for the last, I think, 2 years.
Yeah.
The bear market, the endless seemingly endless bear market. The price of silver peaked in April 2011. The price of gold continued to rise a little bit longer. It peaked in, I think, August of 2011. And after that, it's just been relentless. Every time there was a blip, really you should have sold and then, wait for it to come down to a new low and then buy it back.
Yeah.
And arguably that mode kind of lasted through 2019. But with the onset of COVID, there was a virulent new phase in the monetary system, which is, you know, you thought $1 trillion deficit was bad, pre-COVID. Then the so-called CARES Act, I love how they name these things. It proves that they care about you. Added $2.8 trillion more to a budget that already had $1 trillion plus deficit.
Oh my.
And the amount of debt, the amount of spending, completely off the charts. And gold especially, and silver to a much lesser degree, it's in a new bull market phase. So we're not in the sell the blips, mode that we're in for all those years. We're now in a buy the dips mode. And I think the reasons for this bull market are more durable as well. I mean, that bull market of 2000, call it 2009 to 2011, was the fear of imminent hyperinflation trade or massive inflation, which
Right.
didn't happen. The economics totally didn't match. The reality of the economics didn't match the theory of the economics at that time. That was bound to end in tears, which it did. And one by one, all the commodities which were in bull markets crashed.
Yeah.
Oil was the last one to crash in 2014. Today, the price of oil is well under half of what it was in 2008. When we talk
Wow.
about inflation, the price of oil is less than half of what it was in 2008.
Wow.
Let that sink in. So what we have today is a widening spread between the raw commodity and the consumer good, right?
Right.
So the raw commodity traded in industrial quantities versus the consumer good traded in consumer sizes. That spread is, just keeps getting wider because of regulation and all kinds of other things.
Right.
But commodities themselves are not showing this, great inflation that people were, feared. But the bull market today is driven by completely different motivations than the bull market of 2009 to 2011. This is not a dollar is going to imminently hyperinflate, mentality.
Right.
This is they actually Westerners have not necessarily participated that much in, certainly the last several $100s of this price rise.
Right.
Anyway, this has been the Chinese buying hand over fist because they fear and distrust the Chinese government and the Chinese currency, the yuan. The Turks buying hand over fist, right? So visiting Turkey, I'm told there by several people that I chatted with that everybody in Turkey, if they had any level of money, would have at least 10 grams of gold, which is like a third of an ounce.
Wow. So
Everybody would have
everyone,
at least that.
because the currency is so bad.
That's right. And the average person, they would have a lot more than 10 grams because the currency just goes down. You get the same thing in India, not quite as it's not in quite as virulent a phase as the lira, it was for a while. But I mean,
Right.
the Indian currency goes down. This is over really long periods of time. I think it's 7 or 8% against the dollar, which isn't exactly going up against gold. But the rupee is 7 or 8% against the dollar going down.
Right.
Then you get the Arab world, um, and of the so Turkey, India, China, Arab, of those four worlds, that's really the only one that I would call an anti-dollar or at least anti-US monetary policy play.
Right. Right.
There's very much. I'm in Dubai right now, and I've been here for some months. There's very much kind of a love-hate relationship with America and Americans, and I certainly find I have a good reception wherever I go here as an American. It's not like there's this anti-American sentiment,
Right. It's just
here.
split. It's just split, you're thinking, or you're seeing.
They don't love the dollar and they don't love the Fed's policy because they're always getting the short end of the stick.
Ah,
And so there's definitely a buy gold as kind of an anti-dollar theme here. And what I would say is the gold or the investing public here has a greater understanding of gold than Americans do, and a more sophisticated expert. Americans, I mean, 99 point something percent of Americans don't hold gold and have no desire to own it. It's
no.
a very small percentage of people who own any at all.
Right.
And then the ones who do, some big percentage of them, they own it because they think the gold price is going to be $20,000 or whatever the gold bugs have been promising them. And they think that's going to happen imminently, or a lot of them do. But in this part of the world, I don't think there's that kind of greed play like buy gold because they're running out of it or it's about to be
Right.
$20,000. They just own it because there's a cultural affinity to it. There is a religious component to it. It just makes sense to buy some gold. They have some
Right.
gold in their portfolio, and they look to gold to do more things for them. It's not just like park some coins in the safe under the floorboards and forget about it. They
Right.
want to do stuff with it. So for monetary metals, we put it to work. We pay them a yield on it, and that's an exciting, proposition in this part of the world. But in
Why do you
general, I
think
think,
why do you think it's so different, Keith, from America to the Middle Eastern or to Dubai, where you're seeing that education is different? Why do you think it's so different?
I mean, you obviously have thousands of years of cultural history and cultural affinity.
Right.
The Quran tells them to buy, as I understand, a certain amount of gold. So you've got that. You've got, the marriage culture of gift giving. And, I met one Arab lady was talking about this, and we're talking about 24 versus 18 karat versus whatever. And her eyes flashed. And
Yeah,
it was like
she
someone gave
thought
me,
she thought 18 was trash.
yeah, if someone gave me that, that would be an insult, to my
Yeah.
family honor. Like it
Oh
got
yeah.
all like that pretty quickly.
Yeah.
And so it's a different culture here, but also we Americans live in this incredible bubble of our own making. I mean, the world speaks our language, the world uses our currency. Um, I'm on record as saying many times, there is one currency in the world, it's the dollar. All the other currencies are the local, like company coal mining town paper script.
Right, you're right.
It's that ridiculous.
Right.
I had Jeff Snyder on our podcast, and he said to me, "Do you know what percentage of all the derivatives trade? So there's approaching $250 worth of derivatives out there. Do you know what percentage of those derivatives have the dollar on at least one side?" And I said, "Oh, it's got
Oh,
to be 90% something." It was like 99%. I
oh
mean,
my
it's
goodness.
there's no other alternative. It's not even remotely close.
Yeah, there's
So
just the US dollar.
we live in this bubble that's incredible and seemingly offers bountiful wonderfulness and bountiful harvest, but actually undermines the hell out of us. But Americans don't see that, and we've never had a currency crisis in America. I mean, the worst we ever had it, I was a kid in 1979, which I think was the worst year, maybe 1980. And official inflation was 13%. And okay, you could argue shadow stats would have a higher number, but it wasn't that high.
Hmm.
And you go in the rest of the world and you say we had 13%. It was, everybody was afraid of currency collapse. And they're like 13%, that's cute. You know, a lot of countries, most of them would have had bouts of real hyperinflation, but they'll say, oh, 13%, we get that in a month, easy sometimes.
Wow.
We had that in a year, right? So Americans have never had reason to fear or distrust the currency. People
Hmm.
think of their savings in dollars. Well, nobody thinks of their savings in rupees or Turkish lira, these types of currencies because they're toilet paper,
Yeah,
and
you're absolutely
they
right.
know it. And so in Turkey, the entire gold industry, which is significantly more mature, right, in terms of business process versus the gold industry, what's left of it in the U.S., they keep their books in gold.
Really?
So there's a if you have a currency that's really going down, which means the gold price is rising relentlessly, imagine a business where you're buying and selling this commodity that keeps going up in price. Every time that you buy something for one and you sell it for two, you have a $1 profit. At the end of
Yeah.
the year, right? So if you measured your books in lira and all your transactions in lira, at the end of the year, you'd have this massive profit. And then you pay whatever tax rate on that profit. So what they do is they keep their books in gold. And then, let's say you're buying and selling gold all year long and you start with 100 ounces of gold capital. At the end of the year, you have 110 ounces.
That's
You pay tax
great.
you pay tax on the 10 ounces times whatever the lira price is. Okay, fair enough. I mean, assuming you accept income taxes, fair enough, right? But you don't pay tax on the fact that the entire 110 ounces has gone from whatever 50,000 lira to 50 million lira. You're not paying tax on that.
You're just paying on the 10.
Just on the 10, which is recognized as a gain. So the accounting profession there understands keeping your books in gold.
That's
And you talk about
fantastic.
not only do US tax practitioners they can't even grasp the concept if you explain this to them. So there was one of these, and I don't want to get too into the details because I don't,
Right.
it's not about bad mouthing anybody,
Right,
but there
right.
was a Latin American country that was had a mandate to create a free zone where they're going to have much less regulation and minimal taxation, not really welfare state, and so on. And a bunch of libertarian leaning folks, some pretty big names, were invited to be consultants to help advise on how to structure it, what the rules should be. And I was introduced to them and I said, okay, I have a monetary concept I want to introduce, which is allow businesses to make an election. So in the US, you can make an election to be treated as if you're a corporation, a subchapter S or subchapter C.
Right.
Right. And if you're S, then it's passed through for tax purposes. If you're C, the entity is taxed in its own right. You can't frivolously keep electing every year SC, SC.
Right.
Once you make the election, you're stuck for 5 years. And I said, make something like that. Allow the taxpayer to decide what base currency to use. And if it's a gold related business, allow them to elect gold. And here's this issue, right? If the gold price is going up and you're trading and back and forth, in dollar terms, you could have what looks to be a massive profit. But if you actually taxed at that rate, and I had an example in my little paper, if you actually taxed at that rate, then at the end of the day, you'd take more than the 10 ounces of gold and you'd end up decreasing the amount of capital in the business. And I said, you should do this. They
Right.
didn't get they didn't get the concept that I was trying to articulate. And these are largely economists that are Austrian school libertarian leaning, didn't get it.
That's
In,
crazy.
in Turkey, the entire tax profession and the entire gold trade not only gets it, it's in practice every day.
Right. You
So
could just
there's
say,
there's a difference in just business practice of how the world operates and other places that Americans you can't even picture it if you're just sitting in Phoenix or New York or whatever.
right. They're not like us where we're just buying it and keep it in our closets and keeping it for just a use of profit and trying to hope that gold gets to 10, 20 grand an ounce. These guys are actually incorporating it in their businesses, in their books, which is genius.
And the banks have gold accounts in some of these countries, including UAE, right? So you can make a gold deposit in a bank account here and have an account denominated in grams, and all kinds of things. And people just sort of expect it. It hasn't been demonetized in there. There's a quote from Goethe, which I think is brilliant. He said that none is so hopelessly enslaved, none are so hopelessly enslaved as those who falsely believe that they're free.
Yeah.
And Americans think money means green printed piece of paper.
Yeah, they think they're
And
free.
because of that like mental handicap that like, the blinders are on, they're just
Yeah.
not seeing certain things. Anyways, you
Yeah.
asked me why do I think it's different? I think these are some of the drivers for why it's so different.
Yeah, Keith, you absolutely nailed it. Before you go, though, I would absolutely love I want people to connect with you. I want people to find you guys, Monetary Metals. If you could briefly explain, what the benefits are of, having m money and gold stored with you guys at Monetary Metals, or just explain what you guys do.
We pay interest in gold and silver. So our gold leasing program, which is open to everybody, not just accredited investors, but also non-accredited, we're paying 3%. And what that means is if you deposit 100 ounces, at the end of the year, I give you back 103 ounces.
That's
A
fantastic.
very simple concept. We just wrapped up the first silver bond, I think probably since around 1834, when the Coinage Act at that time kind of demonetized silver effectively. Probably would have been the last time there would have been a bond denominated in silver. Everything after that probably would have been gold, but I can't prove it. We just did a silver bond of over 1 million ounces for a mining company, which is public, trades on the Toronto TSXV, called
Wow.
Bunker Hill. And the Bunker Hill mine is in Idaho. The company's traded in Toronto. And we did a over 1 million ounce bond for that, silver bond for them, and that's paying 12%. It's accredited investors only,
Wow.
but it's paying 12%. So 3-year maturity, you put in 1,000 ounces, we return approximately 1,360 ounces. It's a bit less than that because it's amortizing, so you wouldn't have the full principal for 3 years, but conceptually that's what it is. And if gold and silver are money, or a lot of people may not think they're money now, but if they're to be money again, they were historically. We know that if they're to
Right.
be money again, you got to be able to deposit money to earn a money return on money. And today it's not treated as money. The regulation is all messed up, but um, we're bringing back interest, partly ideologically. I think the world needs to rediscover honest money,
Yeah,
money that can't be manipulated or printed, whether you like Trump or hate him, whether you like Biden or hate him.
right.
Every president of every party going back, 50 something years has been free and fast and loose with the national checkbook.
Yeah.
And they hate gold because gold doesn't allow that. You can't get away with that in gold.
Yeah, yeah. You
Uh,
can't get away with that with
the
sound money.
and the reason is simple but underappreciated. In a gold system, if you don't like the interest rate or you don't like the risk in the banking system, you withdraw your gold coin, which is really opting out. You're saying, guys, I'm out. I'm going to take my
Right.
marbles out of the sandbox and go home. And in the dollar system, what they've done is they've deprived you of an exit door.
Yeah.
You can take printed paper cash home, but that printed paper cash says what? It says Federal Reserve note on it.
Yeah, we're
It's the
still
credit issued by the Fed, and the Fed uses that credit to finance the banking system and the government, the very things that you didn't want to finance. So if you didn't like getting some interest on your T-bill, you can take home the paper cash and get no interest and the same risk.
yeah. You're still a
They've
slave to it.
disenfranchised. Sorry.
I was saying you're still a slave to the US dollar. You're still a slave to it. With gold, you for sure you're gonna be you'll just be free. You can opt out like what you were saying.
Then keeps the borrowers honest. If you want to attract deposits, if you want
Yeah.
credit, then you have to provide transparency and you have to be honest, and what you do with it has to be sound. You have to be investing it always to produce something productive and not just pissing it down a welfare drain and calling that an investment.
Yeah.
So that's what we're doing, and we encourage everybody to look. Our website is monetary-metals with an S.com, and on Twitter I'm at Real Keith Weiner, and that's KEITHWEI. Unfortunately, there are trolls out there that have various misspellings of my name. So at Real Keith Weiner is me, and
I'm going to for sure add the links in the description. Everyone, I highly recommend, please go follow Keith. I'm going to put his social media in the description below, and I'm going to put the monetary metals link in the description below. But Keith, I wanted to thank you so much for coming down to Wall Street Silver. What an incredible wealth of knowledge you just laid on us and showing us the difference on how people treat gold in the Middle East compared to here in the West. But yeah, I want to thank you so much for coming down to Wall Street Silver.
thanks for having me.
Yeah, absolutely. Talk to you guys soon.
All right, take care.